Identifying market structure. It's important to identify the origin of the market structure. If it's a bullish market, we are making higher highs and higher lows. If it's a bearish market, we are making lower highs and lower lows. Consolidation, expansion, and contraction all play into this. As we went over in previous lessons, ranges or consolidation periods typically precede a expansion or contraction. A range-bound market can lead to a bullish market structure from an expansion. A range-bound market can lead to a bearish market structure from a contraction. Trend changes or continuation occur after the price makes an impulse in either direction, breaking the consolidation phase, igniting either a bullish market with an expansion or a bearish market with a contraction. So if we look at our example here, we're going to look at what's happening in an expansion. Well, we have our consolidation range, as we know from price ping-ponging back and forth between our conversation with the sellers up here and the buyers down here. We can see that the sellers are here, 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 and the buyers are here, 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 and here is where the support or the demand zone and the buyers break down slightly, a fake out or deviation below the range, but rebound rapidly and an impulse up that takes out these highs, and our seller supply zone has been broken. This is also telling us that this swing high or this swing high are now broken and we have a new swing high. If we look at our swing low, our new swing high, and our higher low here, we know that this is bullish market structure. Also take note that off of this swing high, as price retraced, it was very close to our consolidation zone where our sellers and supply once were, showing the SR flip in an expansion of bullish market structure out of a consolidation or range-bound market. In this instance, we'll be looking at contraction. The image is flipped, so the candle colors are flipped as well. The buyers and sellers are different than the last example. Please make note of this, but the purpose is to focus on the structure. We can take our consolidation range right here, where our buyers are here, our sellers are here. Here we have price ping-ponging back and forth between the conversation of buyers and sellers. The sellers give way for a bit. Resistance is broken. It's a fake out or deviation, but price reverses quickly, showing the buyer or demand zone in our support breaking down. Now we have our swing high up here. We have our new swing low as we have taken out these lows down here, the bottom of the range. We can see that price tries to make a move back up, creating our lower high off of this high, right into the area where we broke down and our SR flip happened. Price can't go any higher. We make a lower low off of this, and we have bearish market structure out of a consolidation range-bound market. So as we start to get more comfortable with bullish market structure, bearish market structure, swing points, consolidation periods, expansion and contraction, it's going to help us going forward to recognizing breakouts and breakdowns, identifying the trend on a high time frame, which will ultimately help us dialing in our trades on lower time frame. Let's take a look at an example in real time. So let's take a look at gold, switch gears a bit from crypto, and focus in on what we just learned in identifying bullish market structure and bearish market structure, as well as consolidation or range-bound periods that lead to expansion or contraction. So we're going to be looking at gold on a monthly time frame, and let's map out what we see. So I see a swing high right here. I'm going to mark that off. And I see a swing point down here, which is a swing low. So we can see that here is our high point. We need price to go over this and make a higher low to illustrate and confirm bullish market structure. Let's take a look. Here's our swing low. Here's our swing high. Here we can see where the buyers are at support in a demand zone, also showing us the bottom of a range or a consolidation zone. So let's mark that out. Right, we'll call it here. We can see we have something similar at the top. We have a high and a high. So let's mark this out. So here we have price ranging between our sellers and our buyers. Here's our consolidation phase. And at this point, we can see that price is starting to move up. And we're making higher lows here. And we're going to look to challenge this high and this high. As we can see, we have price breaking up over these highs and continuing its uptrend with higher lows. But this is our swing high that really is going to define, has gold broken out on a monthly time frame, bullish market structure. At this point, we can see that price has broken above this high, has made a new high, and we have retraced back to our previous mini consolidation zone and prior highs, and moved up to make a new high, confirming this as a higher low. So this is a very good example of a high time frame analysis of gold on a monthly time frame, showing us higher lows, higher highs, and continuation, creating a bullish trend up until here, which is our exhaustion point of the buyers and where the sellers finally step in. Now let's take a look at what happened over here. Well, we have our swing high, we have our retracement and our swing low. Price rebounds back up and makes a lower high. So we know that this is our swing high, a lower high, a lower low would confirm bearish market structure on a monthly time frame for gold. Price tries to move back up, almost equal highs, still a lower high off of our swing high. And finally, this impulse down takes out our swing low, confirming bearish market structure. As we can see, we're making a new low, a lower high, and consistently lower lows and lower highs. Now, let's take a look at this zone right here. As price goes back up, we still have our swing highs. We are in another, we can call it range. As we see, we have our buyers, our sellers. We are in a consolidation phase. Here is our swing low. We are making a higher low here, slightly higher. We have not made a higher high yet. And at this point, when price breaks out, we've taken out these highs and this high, confirming a higher high, a retracement, slightly back, almost close to these highs, and a new high, confirming bullish market structure on a monthly time frame for gold. Now let's take a look at one more quick example, and let's look at Ethereum. On a weekly time frame, we can see we have our uptrend here with bullish market structure. We have the start of our downtrend. We have our lower high here, and we have our swing low and lower lows and lower highs. But I want to focus on one area in particular, which is right here. And what do we see? Well, we see a consolidation phase or range on a weekly level. We have already been in a bearish market structure. So I had referred to continuation could occur after consolidation or a range-bound market. And here's an example of that. We have our bearish market structure, we have our consolidation phase, and we have our continuation, and we are making lower highs and lower lows until we come back into our range-bound market, and we have our consolidation phase and our breakout. And so it's important to understand that the markets you're looking at are either going to be in an uptrend, a downtrend, a range-bound market, and both expansion and contraction or continuation from a consolidation zone can occur. And these are things that we're going to want to focus on as we go into time frame analysis. But let's do a quick recap first. So, consolidation or range-bound markets are trendless. We saw this in various examples with Ethereum and gold. What comes after a consolidation or range-bound market is an expansion or a contraction. An expansion is a bullish market structure where we have a break to the upside, creating higher lows and higher highs. A bearish break in a range or consolidation period is a contraction where we have lower highs and lower lows. We also know that this can be continuation and this can be continuation. And lastly, market structure analysis, or MSA, is only relevant on the time frame being analyzed. And we're going to go into more of this in detail in the next section, time frame analysis.